Hi, good evening, everyone. I want to believe you can all hear me. If you can all hear me, please leave something in the chat section. I'm sure we can hear me.
Yeah, I
Welcome to.
can hear you. Yes, I can hear you, and I can see the shared screen.
Oh, okay. Thank you.
Thank you, Ryan. Thank you.
So, welcome to another webinar hosted by Valetax Broker Global. My name is Innocent Ifere, Global Market Analyst and Trading Content Specialist here at Valetax. Today, you notice we do not have PowerPoint as usual because today is more of a practical class. It's more of a delivery class. Okay. We're going to be spending more time on the charts than we are going to be doing on a PowerPoint. We do not necessarily need a PowerPoint. So for introduction, we already know my name is Ryan. So today, what are we looking at? We're looking at entries strategies that actually helps you increase your probabilities when it comes to trading. So, what are entries and how do we make these entries and what are the things that, personally for me, I use to validate my entries? So, what we're going to be learning today are executions and strategy. Okay. So, before I go any further, I'd want to drop a disclaimer on this, right? Every strategy when it comes to the financial market isn't 100%. So when people tell you things like they have 100% win rate or the strategy works 100%, that's a big lie. When it comes to strategy, professional traders and experts who have existed long before I did would always tell you that if you have a strategy that proves itself at least more than 50%, then you have everything you need in your hand to become a successful trader, right? What makes you a good trader isn't just your ability to have a good strategy, but most importantly, your risk management. Okay. So when it comes to risk management is where a bulk of people either make money or lose money, either grow exponentially or grow rapidly and then give up over time, right? So today I'm going to be teaching us two major strategies, right, that I use to trade. At the first start of our webinar, two webinars ago, I taught a strategy on how to use your RSI paired with divergence and key levels to make entries. Today, what we're going to be learning is finding entries in a continuation trend. Okay, so when the market is trending, one of the hardest things for people to actually do is follow up this trend, especially on the higher time frames. So today, what I'm going to be showing us is how to get into a higher time frame trend. So you want to swing a trade or you want to take a trade from the higher time frame, maybe the 1 hour or the 4 hourly time frame, how to take those trades. The second strategy I'm going to be teaching us is how to take a trade when a trend is ending. So usually things like a reversal trend. Okay. So we want to know how to enter a reversal trend and how to enter pullbacks, right? So those are the major things that I'm going to be teaching us today. So let's get right into it. Okay, for those of you who are just coming today, there's no PowerPoint. We're just going to be discussing entry strategies and how to make use of them. So I'm going to be switching my charts to GBP USD. Okay, so we're going to be using basic currency pairs first of all, right? Before any further thing. Good. So I had this analysis on the GBP USD, which fortunately played out excellently well, without actually getting to my stop loss. I saw the trade yesterday, but I've really not been busy on the chart and I've not been feeling too well. But this is a very typical example, right, of one of the entry strategies that I'm going to be teaching us today. Okay, so let us start from the 4 hourly time frame and let's look at what a trending market usually should look like. Okay, so we this is on the daily, right? So let's go to the 4 hourly time frame now. So this is a trend here. This is a very good downtrend on this 4 hourly time frame. One of the things we use to identify a a downtrend majorly is what is the presence of is the presence of okay, so one of the things we used to identify downtrend is the presence of what a sorry, it's the presence of a down higher lows, right? Lower lows, lower highs. Okay. So how do we actually make entries on these trends? Because a lot of times we always think it's about breaks and retest. And if we look at this trend very well currently, we would be able to see that not every break and retest was actually holding in place. So this is what I'm trying to show us. So if you can see my chart and it's not too small, please let me know if my chart is looking too small as well. Also let me know so I would increase it. Just because of my eyesight, things too big, I tend to not be okay with them. So we had the first high to this low here. Then we created the higher low at this point, and then we moved all the way down here. So for bear traders, people who like to trade bricks and retest, this would have been the support level, right? For prices to This should have been the support level for prices to make a retest at before continuing downwards. But instead, we saw prices do what? We saw prices move all the way back above that level before coming back down. Now, there's a reason to that. The reason to that being is usually what prices would do in the market is to first manipulate before making this entry. Okay, before prices move to this direction. But usually there's always something that is left, okay, that gives an indication to why these things happen and why we don't just trade every possible break and retest that we identify in the market. So what we're going to be using today is we're going to be pairing, okay, for higher time frame trends, we're going to be pairing the use of liquidity, structure, inducement, and a return to what? To discount levels or supply and demand. Okay, did we get that right? So what we're going to be using for this first strategy is we're going to be pairing structure, liquidity, inducements, and return to supply and demand or discount levels. Supply and demand or discount levels. Okay. So let me please, if you can see my chart, say you can see my chart and it's clear enough for you. I want to make sure that everybody can see my chart. Just leave in the comment section. Say it's clear, say you can see and it's visible to you. Okay. Thank you. So let's clear this out. Right. So let's not disturb this chart. Let's use a different chart. Good. So we see price hit a resistance level here, supply level, where prices moved bearish. Okay. And we had our first major low, then the high, then this low. So now when we identify that this has become a bearish structure, right? One of the first things we want to then do, okay, to make an entry into this bear move is to first understand where the breaks in structure happen, okay, where the possible liquidity is kept. So we have two major types of liquidity, right? I like to call them the macro liquidity and the internal liquidity. So macro liquidity, usually I talk about them on the higher time frames, and then internal liquidity are just within trends, like inside this trend currently that we're seeing. So what you first want to pay attention for is understand that you have a trending market. Okay, so I'm going to use a sketch first of all to help us identify that. So what we want to see is to first identify that we have a trending market. What the trending market would look like is for bearishness, would have something like this. Okay, so this would be a bearish market, right? But now we often won't see the break and retest, like I said. So on your normal chart, what we would have in this bearish market is we would have a move that looks like this and then would have what we call an inducement, which keeps the internal liquidity, right? before prices eventually goes above that inducement, taps into a discount level or a premium level, and then sells off. So we are not necessarily wanting only a break and retest, but we first want to identify certain parameters. We want to identify where, so for bullish, we call them discounts. Okay. So anything below 50% is a discount. For the bearishness, anything above 50%, we call it the premium. Okay. We call that premium. So basically, premium and discount simply is we are saying that we know institutions do not like to buy anything or sell anything where they are not going to make the most profit from. So when they want to buy at the cheapest price possible. And when they want to sell, they want to sell at the highest price possible because that allows them to make more profits. Okay. Keep that in mind. So now what we are looking at is we're looking at the liquidity being kept. We're looking at the inducement being created. We're looking at the sweep and tap into premium levels for the sells. And then if this were to be the buys, okay, would have something like this. Okay. So this would be our inducement here. This would be liquidity, and then this would be the return. Okay. So this is our inducement, this is liquidity. So that's what we're looking for. So we're looking for what? We're looking for the liquidity that was kept first. We're looking for the inducement and then a sweep of it back into where? So this would be our discount level. So this would be a discount. Okay. This would be a discount for the buy sides. So this is buy. Okay. And this would be our premium level. Now, two things happen in our discount and premium level. The two things we want to identify in our discount and in our premium levels are what? We want to look for an imbalance or a fair value gap, or we want to look for a supply and a demand order block. Okay, so that's where you see people talk about things like RTO, a return to what? To order block. So that's what they mean by return to order block. So those are the two things we want to look for within our premium and discount level. Now you would be wondering, how do you find or how do you know your premium and your discount level? We use a tool called the Fibonacci tool. So how the Fibonacci tool is used is you want to place your Fibonacci tool from, so if it's bearish, for instance, and you're looking for your premium level usually would be around the 61.8, 50%, above 50%, most importantly. So you're looking at anything from 53%, 61.8, 79.8, 81.6, all the way up to probably even 100%. But at the end of the day, we want to look for, we want to place our Fibonacci understanding the structure of the market, the trend. So we want to go from the previous high to the identified new low. Okay, so from the lower high to the lower low, right? So we want to look for prices above 50%, which will be our premium for the sales. And if it's for the buys, we want to look for what our, so we take from the lower high to the, we take from the lower high to the higher high. Okay, from the previous lower high, sorry, from the previous higher low to the higher high, and then we want to look for what our discount levels under 50%. So we're looking for a 61.8 discount or a 53 or a 79.6 or an 81.9 or an 89.6, whatever, but we just need prices to be below this 50% or above this 50%. So now let's look at real chart application. The reason why, okay, before that, the reason why we want a placement of liquidity. So the first touch of prices trying to do maybe like a break and retest, which is going to be the inducement. Okay. So liquidity most times, internal liquidity most times is just purely and merely inducement on both sides. So they try to create more opportunities for counter trend traders. So you know that every time prices get to a support, there are always people willing to buy despite the direction of the market. So usually it's a wrong thing for you to buy when you're in a bearish trend, okay, and for you to sell when you're in a bullish trend because you never know where the market would stop you out from, right? So there are people who are always trying to seek every opportunity, scalpers especially. Okay, so every counter trend or day traders, any counter trend, they would want to hop into it. So these moves here, there are people trying to buy off these moves back into the support level. Okay, so this is an inducement of people who would forget that this trend is bearish overall. And the people who try to sell immediately after the break and retest also are being induced because prices have not gotten where into where the premium level for these cells to actually start from. So they keep this area as liquidity, use these people to fuel prices to suit liquidity because at the end of the day, market is liquidity after liquidity, right? So it's just one liquidity chasing the next one. Buyers are chasing sellers, sellers are chasing buyers, right? And then they push prices, take out the stop losses of people selling just at this resistance level, take out their stop losses, take and then the sells from this premium level or our order block or fair value gap, wherever might be in this premium level, takes out the buyers, the counter trend buyers who are their stop losses under these levels too as well. So market basically creates liquidity to create more liquidity. That's just how the market operates, right? So now let's look at the charts. So now we come here and we look at this right here. So this was where the sell started from. Usually, if you want to play it safe and you want to be more conventional, you don't jump into the market after the first initiation of the trend. You want to wait for the second higher low to be formed before you confirm that this is now a solid trend. But assuming, right, we wanted to take this move right here as our at the start of our trend, okay? So we would have this happen here, and then this becomes the new higher low, and then a new low was created. Now, this becomes what? This becomes our previous support level that gets broken, right? So now, what do we see at this point here? We see prices break through the support level. I'm coming, let me leave some things mapped out so we can see them properly. Okay, here we have prices stop at this low. So here becomes the last support point. So we want to take this trade on this trend, a lot of people would naturally, okay, want to sell the moment prices get into this previous support level. Those are people who like to trade what? Break and retest, right? Now, prices got here, tapped it, and started to act as if it was consolidating to continue to sell. But notice what? We had this huge imbalance at this level here, and this was also the supply block that did what? That broke structure. So this is also a break of structure here because this was what the highs that took out this lows. So we have a break of structure at this point too here. So what did prices do? Prices manipulated the first entries of sellers at this point, right? And then moved all the way back into this premium level. So now if we're to plot our Fibonacci, right? What would we do from this high to this low? So where did prices go into? Prices went right above 61.8, probably around 70, 78.6, 79.6 area. So if I was to, let me just turn that, let me what's the settings for this? Okay, so let me turn on 78.6. Let's see. Okay, so prices came all the way to 78.6. Now, why 78.6? If you look at 78.6, you'd notice, if you look at 78.6, you'd notice that what? That we have this fair value here between here and here. Okay, and prices came all the way here, and we could also use this whole place too as a possible order block, but this is not a full body candle, so I do not want to count it in as a possible supply order block, right? But prices came into this fair value here. So fair value usually is the presence between the previous buyers and sellers, right? So within this sell candle here, this was the last point we saw buyers, and this was the last point we saw buyers. So that was a good possible fair value, right? Now, prices came into this level before continuing the sell trend. So this is what I mean by we want to wait for prices to do what? Come into where premium or discount levels before we confirm those sales. Now, for education purpose, yeah, you can use only the Fibonacci without necessarily even having to look for an inducement or an internal liquidity to make your entry. This is why a lot of times the inducement would always fall below the 50%. That's where the inducement would usually happen. Anything above those levels is one of the best ways to make your entry. So if for any reason you feel like you do not know where or how to identify or what to use, right? If you maybe sometimes you could see an imbalance, level or a fair value, or you could see a order block, a supply order block, or a demand order block all together at the same place. So one of the best things for you to use, right, is to use the one that is either closest to the liquidity or the one that is above the 50% at the best discount points. Okay. So sometimes you can see a fair value area or an imbalance at 50% or under 50%. But if you notice that there's a block above it, that's most likely the one you should use because we always want the premium or the discount level. So we've used the first entry as an example, right? So now the trend has continued. So now we have another what? Now we have another break of structure here. Okay, so these are very simple things that we can use. So we have another break of structure here now. When we have a break of structure, when we had that break of structure here, what do we see? We also see that what we have a support level here. Now, very good support level, right? Very good support level. What did we notice here? Prices tapped back into the support level. What happened? We see sellers start to try to take trades at this previous support level. Why? Because they are all anticipating that what when support is broken, support becomes what resistance. So they try to trade it. But now the problem here is what they are not identifying is that we we started this move from where? From this high to this low, meaning that what? We're going to try to look for what? 50% at least or above 50%. Are we saying this? So you see, prices came back to 50% at least or above 50%. Why did prices come back to 50%? When we look at this move here, especially, what we would notice is that prices had already what? We had everything good here. So we had all of these sellers and buyers already interacted. Then we finally had this other block here that did what? That broke the structure here. Remember, this wasn't a break of structure. This was just a sweep on liquidity and then prices went back up. This was the other block. I'm believing that we on this call right now would know what an order block is. But basically, if you do not know, an order block is the last opposite candle in the direction of the trend that breaks structure. So the opposite candle here is the bullish candle. The trend is the bearish trend, and this was the last bullish candle before the impulsive move that does what? That breaks structure. So this becomes our order block. So what did prices do eventually? It did what? It induced buyers and did what? Also induced sellers at this point. So this became the internal liquidity for for the internal structural liquidity here. So what the prices do? Prices allowed people try to sell at this resistance. Okay. And then what eventually happened? Took them out, tapped into this other block here at 50%, and then prices continued to sell downwards. Are we following? If you're following, please let me see something in the chat section. Let me see your replies in the chat section. Let me be sure that we're all following. If we're following and you're understanding or you have questions, please leave them in the chat section. Okay, so now 50% was the deal here. Okay, so this was a good deal. Now, it's not because higher isn't better, it's because of what was present. Remember, I said something just before we came to the second phase of the trend that you want to identify what is within that context, right? So we had a clear order block at 50%. There was nothing higher. So we do not have any other, we do not have a fair value gap above the order block, or we did not have an imbalance or anything. So that's why the order block held at 50%. Okay. So this is one way to use it. Now, there's another thing I would add to spice this entry style for you. Next thing you want to use to add this thing is to use an indicator. And you all know my favorite indicator is the RSI. So how do you use this RSI? You want to see that the RSI peaks. Like you want to see that bend on the RSI, right? You want to see the RSI lose momentum. That gives you a signal with the order block or wherever you want to take the trade from. You want to see the RSI slow down and peak. If you want more confirmation, you want the RSI to fall below the RSI's moving average. That gives you even better confirmation. So you see when prices sold off here and went back up, RSI fell below the moving average to show you continuation of what of the sells. That's one way you can use it. Now, let's move to the next one. So this is one entry here. Okay, this was another one. So this is another one. Now, it's still trending and we've created what a new low here. So now we have another break of structure here. So let's look at this. So now we have a break of structure here, meaning that this becomes our high, this becomes our low, this becomes our high, right? And this from here, where does the new low form? The new low forms all the way here. So now we have a new lower high and we have a new lower low. So plot our Fibonacci first. Plot our Fibonacci. What are we looking for? Above 50%. Remember, this was the break of structure here. This was the previous, let's highlight this. So this was our previous low and we finally broke the structure. Now we look, where did the break of structure happen? So let's take out this Fibonacci. Okay. So where did the break of structure happen? We said our order block is what? Our order block is what? The last what? Opposite candle before the impulsive move that breaks structure, which is this bullish candle. So this becomes what? This becomes our order block here. So if this becomes our order block, now the next thing we also now want to look at is where exactly is this order block? And is there anything above the order block that could be of value to why prices should not allow this order block hold? So we look up, we do not have any other order block, we do not have a fair value gap, nothing is above here, just this order block and our break of structure. So meaning that the next thing we then want to see is, has there been enough liquidity before the order block? We kind of had this test here, right? We had this test of the support level for sellers. So meaning what? We already had a very good inducement. So meaning that retail traders would have what? Jumped into this trade. And you can see that they actually did move the market well here, but prices didn't continue because we had like a support level at this point, holding prices before prices reversed up. So people kept trying to do what? Sell at this previous support level. We can also see another example here before prices came above here. But now let's plot our Fibonacci and see if it makes sense. Okay. So we plot from this high right here all the way where to this low here. So when we look at this high to this low here, what do we see? This is not a good retest point for this move to happen. This becomes above 50%. And above 50%, where are we? 61.8%. Above 50%. So other block was in a good discount area. And since prices were in a good discount area there, what happened? Prices, remember, we're using this is the low we're using here. Why we're using this low here is because we can see that they tried to trade the retest here and hold at this and sell off to this level before prices went back up. Because if we were to use this load, we would identify this as the possible new lower high. Okay, which is not. So this is our key lower high, and this is our low. This was just a manipulation before this move here. So prices came above 50% back into the 61.8. Now let's look at our extra confirmation that I taught us to use, the RSI. Can you see? So when prices came here, what happened to the RSI again? It lost momentum and fell under the RSI's moving average. The moment that happened, prices continued to sell. Are we following? I want to make sure that we're understanding this. I want to make sure that I'm explaining it as simple as I can to you guys. Okay, if we're following, let me see something in the chat section. Let me be sure that we are. Okay, so that is one way to take this trade, right? So remember I said we were already at where we're already looking like we're starting to give up the trend. We were at a support level. Now, same thing happened here again, right? We now have a what? We now have a break of structure. So now this becomes the what? The kilo here. So we now have a break of structure here, right? Now we have a break of structure here, but now look, there's something wrong here. When we had this break of structure here, people sold where? People tried to sell at this point here. People tried to sell at this point here, but prices went above them here and then do what? And then finally started to sell off again. Now, what the prices do at this point? We plot our Fibonacci from here and bring it all the way here. What do we see? Prices did an extreme what pullback back into almost 100% before selling off again. Before selling off again. Why? Why is that so? Because we see that prices kept using this area here as support level. So instead of using this previous low here for people to retest and buy, they were using this level here instead. This consolidation. So prices consolidated here, doing 100% return before selling off again. So it consolidated, and within this consolidation here, prices did what? Manipulated buyers and sellers continuously, but it never took out this structure. So we were still what? We're still in structure, bearish structure. Now prices then sold off, making here what become the new low again. So this now became the new low. But even within this low, what you'd notice is that pricing wasn't clear enough. It just still felt like we had another support level here before prices then finally broke above this low. So this is now where we now have what you popularly hear as a what? As a change of character. Why did it become a change of character? Because we have now finally taken out a key lower high, because this lower high was responsible for what? For creating a lower low before prices broke above it. So this was where character changed. So at this point in time here, this bearish structure was damaged, was destroyed. For me personally, I wouldn't have been looking to make an entry on this trade here again because of this range. I would have waited for a huge displacement to make sure that I've broken out of this range properly before moving forward. But then we had a clear break of structure here and a shift or a change in character. So hence why when you look at my GBP USD analysis that I had on, uh, okay. So that's why when you look at my GBP USD analysis that I had on here, right? You notice that I mapped out what? I mapped out these highs here, right? And I mapped out these lows here. So I identified the change of character. This became my internal structural liquidity higher time frame, and I was waiting for prices to come back into my into my fair value area or demand area, right? So this became a huge demand area. Remember, we saw plenty consolidation here for the sales. So you see, I targeted the sales, the return back before I'll take the buys. So I'm just showing you that whatever I'm teaching you is what is being used, and is I'm not just experimenting with you guys, right? Okay, so that is exactly what has happened now. So what is happening now currently is now from the daily time frame, right? So from the daily time frame, I can see the huge displacement. I can see the change of this bearish trend here. And I'm also seeing prices selling back into this area before any possible continuation. Now, why I'm also looking at that too as well is because I can also see that I still look very bullish on the daily time frame, right? So when we go back to our 4 hourly time frame, there's also things to look at. Where did these sales come from, and where would these buys start from? So far with this trend continuation entry strategy that I have showed you guys for the bearish trend, do you have any questions? Let's take a question quickly. If there's anything you do not understand on how to apply the break of structure, the fake retest that a lot of people enter, which becomes our inducement, and then the return into discount or premium using either an order block or a demand and or a fair value and imbalance. If you have a question about it and you do not understand it, leave a question quickly before we go into the next strategy. It's getting late so that we can also get time to rest. No questions? So I'm assuming that it's well understood. If it's well understood, just so understood in the chat section, please, because I know we can't specifically interact. So just say well understood. Let's move to the next one. Okay. Okay. So the next entry strategy that we're going to be looking at, right, is going to be taking trend reversals. So now we want to take trend reversals, right? So what are trend reversals? So trend reversals is when we want to catch the trend at the end of a trend. So either the end of a bullish trend or the end of a bearish trend. Okay. So now we're going to clear these charts, and then now we're going to do. So usually when the market is bullish, okay, at some point it ends its reign and become bearish. The problem is a lot of people do not know when. So I might have to make this smaller. Okay, so a lot of people do not know. Sorry, I just like big things. So a lot of people do not know when. Okay, they do not know when a trend is about to change, right? They do not actually know. So this is what we're going to be looking at now. So how do we take trend reversals? So what I need you to keep in mind for structure is structure always have anchor points. Okay, we always have. Okay, someone asked the question. Let me just take that question quickly. Someone said, when price get to your discount and premium level, how do you know when to enter? Like what confirmation is best to enter when it gets your level? So I did not explain that because I would usually expect that traders and should have learned one of the most important thing when it comes to trading is price action. So what I usually would do is look for momentum shift. So a momentum shift is where, if for instance you were you were buying, 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 buying. There were a lot of, solid buy candles, right? What I want to see when prices get to my point of interest, right? Which is either your discount or premium level, paired with an order block or a fair value gap or imbalance, right? What I want to see is a momentum shift. If previously buy candles were heavy into this level, I want to see the buy candles start to lose their sizes and their momentum when they get to my point of interest. Now, the next thing also I want to notice is that I want to see the bearish candles coming with huge effects, right? So I want to see that huge bearish candle coming to the market, or I want to see the buy candles try to break above and then buyers reject the candle back from that level. Okay, so that is what I refer to as momentum shift. If the candles were strong bullish candles, I expect them to start to slow down when they get to my point of interest and then get big bearish candles to come into the market. Then I also want to see buyers try to, go back up again and get rejected. So that way I make my entry. So you can also do what we call a smaller time frame cross-checking where you want to look for a change in like what I'm going to show you here now. You want to look for it probably maybe on like the 1 minute, on the 3 minutes time frame. That would also help you understand, if the momentum has shifted. But I hope this helps you, right? Price action. Is the momentum shift time frame dependent? Basically, if you're on the 1 hour time frame, you want to see a very good close of a 1 hour bearish candle. So if you're on the 1 hour, if you can't go to your smaller time frame, maybe let's say this your point of interest is on the 1 hour time frame, right? You want to see a very good 1 hour bearish close. So I usually would wait for the 1 hour candle to close or the 4 hour candle to close. So I want to see a very good candlestick from the 4 hours or the 1 hour time frame. On the 15 minutes time frame, I want to get a change of character, okay, on the 15 minutes time frame for a good entry, change of character and a return for a good entry. That would be a more conservative entry, right? Or you look for it if it was on a 1 hour time frame that you're finding your point of interest. You want to look for it maybe on the 5 minutes time frame to get that quick change to make a sniper entry, right? Kind of thing. But if you want to play the higher time frame long game, you wait for the close of the 1 hour candle to prove that the momentum has what shifted. So you want to look for something like a shooting star. You want to look for an engulfing candle, things like that at that level. That's how you identify the momentum shift. Okay, so yes. So now the next one is trading reversals. How do you trade reversals? So this is a bullish trend, okay? And now we've seen prices come into a supply level on the daily time frame or on the higher time frame. Now, a lot of times people want to trade this, right? You want to take this trade. Now, one way you can take this trade, pay attention, guys. One way you can take this trade is that you want to identify what we refer to as a shift in momentum, like I was clearly explaining here, okay, which you would identify in the shift on how the character plays out. So this is a 4 hourly time frame, but we can also use this, okay. I would this is me trying to illustrate a 4 hourly time frame, but we are going to use this part as well. Sorry, we're going to use this part as well to illustrate a 15 minutes time frame too. Okay. Okay, guys. So we'll use this to illustrate 15 minutes while we use the whole of this to illustrate the 4 hours. Okay. So now when prices get to a major level that's going to cause a reversal. One of the things that you want to use to identify that level is when you get to your lower time frame, you would notice that prices slows down. Prices starts to become very slow approaching that point. Whenever you see a level, for instance, let me give you guys a tip. Whenever you see a support or a resistance level and price is moving into that level aggressively, there's a likelihood that it is never going to hold. That level should, at the back of your mind, become invalidated. Okay? And here is why it should become invalidated to you. Because when prices want a level to hold, it does not bruise it aggressively. It does not go into it aggressively. Prices would always slow down before the accurate point of interest, except it wants to just manipulate it. But when you have a point of interest and prices are rapidly shooting into that level, it's most likely not going to hold. It would react, but it would not be responsible for, doing anything significant to change the direction of the market from that point. So how do you approach this? You want to identify first that prices would leave structure before that point of interest and then pull back and then try to break structure into that point of interest, thereby creating what another swing between a swing high and a swing low. This is a bullish instance, right? Now, what we want is for when prices get into that level, we want it to take out the most. We want it to take out the most what? Sorry, I'm trying to see if I can zoom it properly for us. Okay, so we want it to take out the most significant low which is this that has created the high into that level. And then we want prices to do what? We want prices to take out that level. Now, this becomes where the structure shifts. So now, because this becomes the most, this is our key level, right? This is our key structural point, which is the higher low, which is responsible for creating the new higher high. So unless the higher low is broken, it means that there's no shift, right? So now what we want is we want to get the shift of this higher low, which is our significant structural point. And then when this happens, we then want prices to return back, to return all the way up. Now, the question now here is, how do you know how far prices should go? And how do you know how far prices should stop? So what you want to use are two things. In order for this shift to happen here, that we would eventually refer to as a change of character, okay, we need to see something such as a supply that creates this break, or an order block, a supply order block that creates this break to the downside. Now, the next thing we also want to look out for is we also want to see that inducement. Why do we want to see that inducement? Remember that this has been a bullish structure. So a lot of times people are still encapsulated in the what? In the bullish move. So they are still seeing breaks of structures and they've totally forgotten. So a lot of times people would do what? People would run into these buys to still try to buy, creating more inducement opportunities for smart money. So we want to see them try to keep buying this level till they get back into where exactly our premium levels again, above that 50%. So we should always have our supply or whatever the you know thing is that we're going to be using to enter this trade above our 50%. Are you following? So above our 50% is where we want it to be, our supply order block that took out this shift here, this previous bullish low, right? We want it to be above the 50%. Now, if that is above the 50%, then it would then validate our next entry. Now, that is one way we can use to make an entry after this shift in structure. The next thing we can use is the previous high before this higher high, which is this level here. Now, when we use this point, okay, this would look very familiar to a lot of you. So I'm believing that you must have heard something called the heads and shoulder pattern. When we use this point, we're expecting that prices comes all the way back up to create what a possible heads and shoulder pattern. So we have the head and we have the two shoulders. So this is one level you can use. If you can't identify, an order block or any of those things, you want to use this level as your holding area and stop loss above the head. So stop loss is above here and we want to use here. Why? Because we've identified a shift. So now we can bet on the risk that this bullish trend is over and now we need to see the continuation of what the bearish trend. So this is how you catch that sniper reversal on your trade. So this is where this happens on the 4 hourly time frame, and then the person opens the daily time frame, and then you see that he caught it on a line like this, for instance, and he has stacked positions here. And then you're wondering, oh my God, how did he catch this sniper entry? He did that by identifying a shift first. He didn't just enter blindly. So you have to identify the shift that this structure has actually ended to prove to you that that these cells should happen. If this structure has not shifted and has not ended, we've not gotten that possible change of character, then these cells wouldn't happen. So we are either using what? We're either using an order block that broke the structure, or we are using the previous low here. Because why? This is usually the actual place where the sellers originated from. This was just a manipulation into the level before what, to make people think it's not going to sell, scare people away before they finally dumped prices back to the downside. So we can always use here what as our next possible entry, which will then give us that heads and shoulder pattern, and then we can then continue. And when prices get to this point of interest as well, we can now scale to or lower time frame. Now, when we scale to the lower time frame, what would we then be looking for? Something similar. Remember, prices wouldn't just, like I said, if a level is going to hold, prices would not speed into it. Prices would gradually trend into that point of interest, and we would see it lose momentum as it keeps going. So when prices get into this point of interest, what you can also use the structure that it created on the smaller time frame, probably the 15 minutes time frame, wait for it to break the previous 15 minutes low, and then that will give you confirmation to enter your trade, and that will give you your best possible entry for the trade. Do we understand? I need questions. Do we understand? Any questions? Okay. So let's do chat work. So we're going to use this MGBP USD, and this is going to be a forward analysis, right? And we are going to use this as an example and also use it as a possible entry for next week. Okay. So we've been bearish. We've been bearish before we went bullish, right? So this became our key structural point here. And then this became our previous break of structure. This became our main low, and this was our high. So, okay. Then we had our break of structure here. Had our break of structure there. Now, what do we have from here all the way up here? Is we have this huge imbalance at this level here. So this was our last interaction between what? Between the last two sell points, which is here. Okay. Now, prices never came to fill this imbalance candle here. Instead, it kept trending higher, meaning what? Meaning it kept what? Inducing more people to take the buys. So what have I done? I identify this as my internal liquidity. Remember, this is a higher time frame liquidity. Okay, so I'm looking for what? So we've seen the shift in structure here. We've seen the break of structure to the downside, experiencing that we're still going to keep selling, and then prices broke above it, right? So this is now becomes our shift. So this becomes our possible, this becomes our possible what? Change of character. So this becomes our change of character or liquidity. That's what I like to call it. I like to call it change of character liquidity first before I identify it as change of character. Now, in order for us to confirm and continue this bullish trend, it means that what we need prices to come back into a what? A supply and a demand level. So this was the first instance of the break from this low here to this high here, and prices never came back. This is the first time we are seeing price come back below. This was the first attempt at a retest. It never broke. The first attempt at a retest never broke 50%. This is the first time we're coming below 50%. Now, what are we identifying? We're identifying that the other block, which was responsible, yeah, this fair value as well, and this was the last bullish candle. This point here was the last bullish candle before the impulsive move that did what? That broke above these highs is here. So if this is the level here, so this is the level we're waiting for just below our what? Our 50%, which is our discount level. Now, what we're going to be expecting to see is not for prices to run into these levels, it's for prices to actually start to slow down. So we're going to go to our 1 hour time frame now. Okay, come to our 1 hour time frame, and now we want to see. We want prices to slow itself down at this point. You can see. So we had huge sell candles, and now we're starting to see buys, and now the sell candles are slowing down. So what we want is not for prices to create another huge candle into this level. We want prices to slow down and take its time to finally come into this level. And then when it comes into this level, we then want to see the market start to do something like this. Okay. And then it would do similar, a break of structure and a change of character, possibly on the 15-minute time frame before we continue. Or we get a manipulation of this level quickly and then back above it, like this. What would we use to also confirm that this level would trigger our entry at this level? We now also use what? My good indicator, which is the RSI. As you can see currently, the RSI is already showing what? Is already showing an oversold indication. Prices have been oversold already at this point. Is why buyers try to come into the market. So meaning now that the next time prices are going to come is the reason why we're already slowing down at this point. So meaning that buyers are already trying to engage here, but sellers are still trying to force the market down. So what we're going to get here is going to be a most likely a divergence. So prices will start to what? Create lower, higher lows on the RSI, but prices will still be selling. Once that divergence is identified, if that divergence is identified, then it means that our entry here is going to be what is going to hold. Why? We can already see momentum dying here. Momentum is already dying. That's why I see that prices are slowing down. So this is exactly what I'm saying. So this gives me a certain level. This gives me a certain level of confidence in my probability on this entry. So this is a futuristic example of what I have just explained to us. So now we have a first-hand opportunity to try this out when the market opens next week. I don't want to show you what has already happened. I already did that with the first entry. Now let me give you a practical homework for the second entry. So this is our practical homework on this webinar for next week. And when this is done, I would love for you, when you've applied this and you see that it holds or it works out, remember, this is not 100% guarantee. The market is probability, right? So if this probability plays out, I would appreciate, even if it does or it doesn't, I'd appreciate you head to our Instagram page at Valetax Official. Go and look for a video with my face on it, Rion. You would probably see my name in the caption, and leave a comment and tell me if it played out or it didn't play out. Okay. So this is going to be our take-home assignment. If you have any question, please let me know what your question is. So, let's have a Q&A session about this second strategy. No questions? Does that mean everyone understood? Okay, guys. So if you understood both strategies and you also understand the last one, just say you understood in the chat section. Beautiful. I love this. It means my explanation was very clear. It means that when we get into the market next week, it would be easy for us to go into the market and what and make the best of it. So I want to believe each and every one of us would be applying what we've learned so far. All right, guys. So I'll see you guys on the next webinar at the end of the month. Until then, don't forget to trade with Valetax. If you do not have an account with Valetax, please make sure you get yourself an account. It's just $1 deposit minimum to get your account activated. And we have an ECN account that is excellent for just a minimum of $50 deposit, first time deposit. After that, you can apply any amount you want in it. And we also have our leverage as high as 1,200, which allows you to, trade aggressively, flip your account. But we also, most importantly, have a drawdown and negative help option, right? Where we help manage your margin in times of high liquid periods, like during news events, and that doesn't allow you. Okay. You have a problem connecting my account on MT5, please do leave me a message. I'll put my number down. Okay. So this is my number. I'll send my number to the chat, so you make sure to please leave a message so I would send it over to support, or you can reach out to the support on our website too as well. But just for quick access, feel free uh to send me a quick message so I can raise your query. Okay, guys. So until next time, I'll see you guys and yeah. It's there in the chat section. You can get it from there. So I would help you raise the query. Okay. So bye guys, and thank you for joining another Valetax webinar. I would see you on the next one.